CEI continuing to honor our downside thesis. Let's go ahead and find out exactly what could happen for the following sessions. What is up, you guys? Thank you so much for stopping by once again on this fine Christmas Eve. This is ARCa coming at you with a CEI technicals, raw price action, and maybe some statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at CEI on the 6-hour chart here, and this is the broadening descending wedge that we've been looking at for quite some time now. We did notice that we had the breakout number, the resistance test number 1, resistance test 2, and 3, and usually what happens on that massive 3 test is actually the biggest capitulation that the play can offer. Okay, so this is a typical movement per a broadening descending wedge. Okay, at first we did think that we were within actually, this was all caught within the first video that I made. So I did speculate that we were within a descending channel, but upon the completion of that first video that I released for CEI, I did mention to everybody that we were in fact trading on a descending broadening wedge based on the targets that the indicators and the statistics were suggesting. Okay, so in this case, the bottom suggestion that I was looking at was at the inverse 1.618, $2.19 that we actually saw from December 16th. Okay, so this is still the target that I'm looking at. It may actually wick down lower, but this is still where I'm seeing my overall target. Okay, that's been looked at for literally a week or more. Okay, so now let's go ahead and just look at the immediate short-term time frame analysis, and particularly with the ARC-Series Crypstex indicators. Okay, so now first we're going to load up DBSI. Okay, so DBSI is a statistical indicator that actually takes a score of every single candle printed of the asset's particular time frame that you're in. Okay, so in this case, it is taking an average score of the bi-hourly chart throughout the entire trading history of the asset. Okay, so in this case, we do get a statistical value, and that value appears conveniently right at the top of your screen as a percentage value. Okay, so the bears, as you can see clear as day, that they are leading with 55%, bulls 45%. Okay, so DBSI also recognizes bearish signals based on the 13-day exponential moving average that you see here with this yellow line. Okay, so as long as we are below that 13-day exponential moving average, DBSI looks at it as a potential bearish signal. So in this case, you can actually see the penetration of that 13-day exponential moving average. It printed our sell signal right down here with this little red dot, and it has since continued to the downside, and it has not recovered with the blue dot. Okay, so the blue dot in this case opened at the opening of this candle here, and it did go to the upside. All right, so in this case here, it gave us the sell signal at the opening of this candle here, and it has continued that downside suggestion. So we definitely should take this into some account. Okay, so let's go ahead now and look at ARC Armor. Okay, so Armor is an indicator that is actually comprised of several exponential moving averages, all of them placed very close in proximity so that we can be able to gauge this type of directional wave. Okay, so this is a type of indicator that gives us a directional movement. Okay, so within that directional movement, we do get buy and sell signals. Okay, so for example, here you get a long, it goes up, you get a short, it goes down, you get a long, it goes up, and so on and so on. So particularly to this instance, or to the iteration that we're currently in right now in the bi-hourly chart, you can see that the sell signal was presented on December 20th, and it has since continued to the downside and has not recovered with a long signal. Okay, so that is also something that we should take into account. Now let's go ahead and move on to the last ARC series indicator, which is actually going to be the ARC Enhanced MACD. And you can see ARC Enhanced MACD also printed a sell signal. This one was a little more aggressive than ARC Armor. And actually, let's see how it was a comparison to DBSI. Okay, so DBSI and Enhanced MACD actually printed that sell signal on December 19th, and it has since continued to the downside. And as you can see here, we do not have a bull signal printed for that Enhanced MACD just yet. We we are now below the mean, and the Bollinger Bands are actually still expanded. Okay, so as soon as we start getting a contraction of the Bollinger Bands just like this, then we can expect the type of move to the upside. But we are still expanding, and we are still continuing to the downside per the indicator suggestions. Okay, you guys, if you are interested in picking up these indicators, please reach out to me on a DM. I will go over the subscription packages for them so that you can be able to have them and trade like me. Okay, know that I do use these as a form of validation for a thesis. Okay, so if my analysis comes back saying we're going to go to the downside, I usually use Enhanced MACD, ARC, Armor, and the ARC-DBSI for confirmations that we are in fact going to the downside. Okay, you guys, so I do pair it in strategy. So upon acquiring these indicators, you will also receive ARC RSI and BBWP, of which we're going to be speaking of a little bit later in this video. Okay, you guys, so definitely send me a DM. Know that the subscription packages offered by TradingView are only for TradingView software, not for the indicators. Okay, Crypstex, they are authorized retailers within TradingView. Okay, so you would actually have to go through us to get access to the private list, which can be offered to you. Okay, so let's go ahead and move on now to the next chart. So this is the macro perspective we've been looking at for quite some time as well. Okay, so this is the 1 month chart, the monthly chart, and we have been talking about the succession of this trend line here, which is actually the price objective that this formation itself has to offer. Okay, so this is a right-angled broadening ascending wedge, and usually that price objective is acquired by taking a trend line from the breakout point, right, which is this candle here. So it would be from the top of the trend line, the ascending trend line, to the very lowest point of the support trend line, and from there we actually apply it to the very bottom, starting from that support line now as a resistance, and that gives us an implied target. Okay, so now in this implied target, I am seeing a support range, which is actually right between the 2.272 at about $2.31, which shares confluence with the support line from the wedge itself, and also the 2 fib at about $2.12. But with momentum and this candle printing on the monthly here, I can definitely see for sure a minimum touch of this area right down here. A minimum touch of this suggestion of about $1.64 before a likely continuation to about $1.31. So this is I am still honoring this same support that I have been honoring for days and days now. Okay, you guys, so please know that there is a risk for that continuation to the downside. I know there's a lot of negative sentiment on CEI because a lot of pumpers were arrested or whatever, but know and rest assured that I am not doing that. I am not pumping anything. In fact, I'm telling you that it's going down. All right, so please take whatever I do show and iterate within these videos as just a form of entertainment. I can't actually suggest for you to sell any assets, okay, or buy them. So and I need you to do your own DD, okay? And everything will be just fine, guys. It doesn't mean we can't discuss it. It doesn't mean we can't speculate, okay? That's why we're here. We're here to learn and be better traders together, okay, you guys? So now let's take a look at the statistical side of this, as there are some things to look at here. So for the new viewers, this is volatility you're looking at, represented by this indicator BBWP. BBWP, or volatility, is actually direction neutral. So we use the stochastic momentum oscillator, which is actually a free indicator within the TradingView platform, and it is very much proprietary to TradingView. Okay, so actually I do have the link in the description below if you want to become or create an account with TradingView, since I am an accepted affiliate, and it does help my future of trading out if you do sign up for that. Okay, you guys, please consider that. So now I have backtested the momentum indicator in several tickers, and I am getting some pretty interesting results. In fact, it would be using, if you're familiar with statistics, using the first standard deviation, I'm actually getting the lower end of about 75%, and the higher end of the first standard deviation at about 90% in guessing the accuracy of the the accuracy of guessing the asset's direction. I can't speak any English right now. My apologies. Okay, so as long as the stochastic momentum indicator is is pitched to the downside, the likelihood is pretty great that it's going to continue, that the price action is going to continue to the downside. And as you can see, the suggestion is suggesting a continuation to the downside. And another thing is that we are at critical volatility, which is usually anywhere above this 90% trend line here with the color yellow. Okay, so whenever we're within this 90 percentile, we're at critical volatility, and definitely downside is more than likely at this point. Okay, you guys. So now let's go ahead and okay. Actually, I wanted to touch on something. I did run a back test of the CEI asset, okay, throughout the entire trading history of it using a momentum versus volatility profile. So now momentum versus volatility is the test is actually this. Okay, so now remember that there was a reverse split, so which is why my analysis is actually below the price action, but it's still very much exactly the same. Okay, so throughout this back test, I actually measured every iteration to where the price action was guessed to the upside correctly. Using these vertical lines versus incorrectly. I also took note of the asset's upside movement, the duration of it, which is this, and the upside thrust of it, which would be right over here. Okay, so throughout the entire trading history on the 12-hour chart, that's how I actually took these metrics, and the statistical values that came out of it are very interesting. Okay, so we're looking at a total of 44 total iterations throughout the entire trading history of CEI. Correct iterations are about 29 in guessing the asset's upside in particular. So that gave us an average upside accuracy of 65.91% with an averaged upside thrust of 73.19.5%, or not 195%, my apologies. And now that 75% or 73.195% upside thrust can be applied to the price action only upon the validation or the criteria being set particular to the volatility versus momentum profile. And what could that be? Well, it's this. We do need the momentum oscillator, the averages, to actually start pivoting towards the upside. So this is likely going to happen in some days, okay, maybe potential a couple weeks. We are in the 12-hour time frame. We do have to take that into heavy account. Okay, so in this case, we do need for the price action to essentially influence the moving averages to do this to the momentum oscillator, and we can also expect a contraction phase starting from the volatility itself. Okay, so in this case, we do or would need this criteria to be met in order for us to apply that upside continuation first. Okay, you guys, so do know that we are not anywhere near that just yet. We do need to continue on the downside first so that this can correct and make that upside move. We're still days away. Okay, so let's go ahead and move on to the last part of the analysis here. So this is the divergence chart. Okay, so divergence is the price opposition. Okay, so I'm talking about price action opposition versus momentum. So in this case, momentum represented by RSI, relative strength index. Okay, and as you can see, the 12-hour time frame is still suggesting a continuation to the downside, with the purple line being the RSI signal itself, the pink line being the 14-day moving average, okay, which is standard to any RSI setup. And it doesn't take a rocket scientist to know that these candles are suggesting a continuation to the downside, okay, you guys? So in this case, what we're looking at are bearish drives of divergence, okay? Now, what type of bearish drive of divergence? Well, that's why I have this chart right up here for you, okay? So we're looking at price action making a series of lower highs, and we're looking at the momentum making a series of higher highs. So in this case, you can see that we are making two drives of phantom hidden bearish divergence, and we do have one drive of regular bearish divergence, and it is also phantom. Okay, so we still have these primary drives suggesting a downside, and we have not created a pivot so that we can actually start looking at the downside of the bullish side of things. Okay, so meaning the underside of the price action and the underside of the momentum. Okay, that's how you can distinguish bullish divergences versus bearish. I'm talking about the higher highs or higher lows, versus the lower lows and lower highs, okay, particular to the bullish side. So now let's go ahead and move on to the last part of the chart, which is actually going to be a multi-pane, and we're going to see or try to gain an edge for the immediate short-term time frame to medium-term time frame for the CEI asset. Aside from that, we already kind of know that that direction is favoring the downside, and the bears are actually in control of this for now. Okay, so please, new viewers, focus in or gander at these RSI properties here, as I would be speaking about these zones very often here. Okay, so these zones are actually located right over here. 1, 2, 3, 4 zones. Okay, all right, so the immediate short-term time frame, 30 minutes, suggesting a continuation to the downside. Now that downside continuation does appear to have some type of support from the moving average being below us, but that is likely to face a small bounce and then reject from the oversold percentile border between the bear strength percentile and oversold percentile. Okay, so that would be this border right here. We would likely reject it and come right back down. Okay, so now let's look at the bi-hourly time frame, suggesting a little bit of sideways trading. Very slight bearish over here, but it's still nonetheless suggesting a continuation to the downside, and it has since entered the oversold percentile, so this is still a little bearish. Okay, so but nonetheless sideways. So let's go ahead and look at the 6 hour now. The 6 hour time frame is starting to kind of correct, maybe towards the upside, still suggesting downside. However, the position is very important, of which we're in within the RSI. Okay, yes, it is curving. It does look like it's going to start making an upside, but know that it also is approaching the very deep areas of the bear strength percentile, and not to mention the fact that we're well within the grips of the bear strength percentile. Okay, so when we do reach the deep areas of that percentile, we are definitely likely to be experiencing a gravitational pull into the oversold percentile. So this is very dangerous. Okay, you guys. So now let's look at the daily time frame, as we already saw the 12-hour time frame with divergences, and you can see here that the RSI signal is now in the deep areas of the bear strength percentile, and the moving average looks to be primed for a bearish cross. So as long as we are within this deep area, the gravitational pull likelihood is very great. Okay, so the continuation to the downside is something that I'm still looking at, and for sure I'm not gonna back down on my initial target that I talked to you guys about. This would now actually be probably minimum at $2.19. Okay, you guys, so it is also the bottom of the broadening descending wedge itself too, so it does share some confluence there, and the 1.618, of course. So please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay, I need you to do your own DD, and everything will be just fine. Okay, we can discuss this, we can actually talk about this. If you do feel like talking to me, please don't hesitate to reach out to me. The links will be included in the description below for Discord and for Twitter. Okay, you guys, the Discord name is actually ARCa. So another thing is that I've noticed that there's a lot of ARCa imposters now, and more than ever actually, as the channel is growing very fast. So please know that I will not message you first. I will not give you my phone number like that, you guys. There are these things to say WhatsApp me and that. I don't have a WhatsApp. Okay, I have an Instagram, but that Instagram is actually never used by me. And the for sure platforms that I'm in is definitely YouTube, Discord, and Twitter. Okay, you guys, you can definitely reach out to me there. But with that said, I think this is a pretty good place to leave off with the video. I wish you a good night, a very good weekend, and certainly happy holidays. And I will catch you at the bell on Monday. Or actually, it's going to be Tuesday. My goodness, sorry about that. It's going to be Tuesday, as there will be a closure for the markets. So on Tuesday, all right, you guys, adios.